The cash flow statement helps your client answer the question, where did all my money go? And so you can think of this statement as a motion picture. That means that it not only shows the actual results over time, but it also lets you compare those results with your client's budgeted financial goals. So let's go back over those three parts of the cash flow statement. The first one is income. And remember, that's not just wages and salaries, that's total income. And then the second one is expenses. So again, when you're preparing the cash flow statement, try not to leave anything out. And remember, we're going to capture this income and these expenses on what's called a cash basis, meaning it doesn't count until that money is actually received or it's paid. So we're going to base the cash flow statement strictly on cash inflows and cash outflows. And then the third part of our cash flow statement is the surplus or deficit. Now, in order to arrive at our surplus or deficit, we're going to use what you can consider the cash flow statement equation, or maybe the cash flow identity. And that equation is simply the income minus expenses. And that's going to give you either a surplus because income is greater than expenses, or what we don't want is a deficit because income is less than expenses. But this can be a very telling statement for you and your clients because it helps you figure out where their money is going and maybe helps you unearth some income sources that they didn't think about initially. And also, it tells you how good of a job they're doing of living within their means. Meaning, if they have a cash surplus, that means they're doing pretty well. But if they have a deficit, they might have a spending problem. And that would prompt you as the counselor to ask some questions about where is their money going? Are these expenses necessary? And because the cash flow statement is capturing one moment in time, you can ask them, is this a regular occurrence? Is this your normal income, or is it maybe a little bit lower for this period? And are these normal expenses, or are they maybe a little bit higher than usual, and that's what's driving the deficit? And then on the surplus side, if they're managing their money well such that their income is greater than expenses, then you as the counselor can then start talking about what to do with that surplus. So the cash flow statement is an excellent tool to help you determine where your client's money is going.